Advisors to the Canadian province that is home to potash say that BHP Billiton's $40 billion bid has the edge over any Chinese-led alternative. The Conference Board of Canada, an independent non-profit organisation, says that a BHP takeover would cost the province $2 billion over 10 years in lost revenue. But BHP's interest in returns on the investment would ultimately benefit the region, whereas China's interest is in lower potash prices for its domestic producers. Andrew Robertson reports.
Resources are a big part of the economy of the Canadian province of Saskatchewan, and the local government is taking a keen interest in BHP Billiton's $40 billion attempt to get control of the province's potash supplies. It's commissioned an independent report to examine the proposed deal.
This report certainly identifies concerns, no question about it. It identifies some small opportunities, but it definitely identifies concerns.
The main concern for the government of Saskatchewan is money, with the report claiming a successful BHP Billiton bid could cost the province $2 billion over the next 10 years, or about 2% of its annual revenue. But the report goes on to say, with the exception of significant government revenue impacts, we found few negative takeover effects.
It would imply that BHP's offer in the scheme of things is probably quite fair and reasonable. I can't see any deal-killing stumbling blocks here.
Potash, though, is doing all it can to frustrate BHP's hostile takeover attempt, including going to the courts, where both sides are now demanding the other produce a long list of documents. Morningstar's Mark Taylor says he's not surprised by Potash's actions.
It's stalling tactics by the target company, and the longer they can keep BHP on the line, then the more time there is for a competing bid to come in, and also for BHP's patience to wear thin.
That competing bid may well come from Chinese state-owned Sinochem, which failed earlier this year with a $2.8 billion attempt to buy Australian agricultural company Nufarm.
It already has to deal with BHP in the iron ore market. It's a customer of BHP's, and I think it doesn't want to see BHP get in a similar type of situation in the potash industry, because China also is a big potash buyer.
The world's largest, to be precise, and it wants cheap supplies, something which is making the Canadians nervous. The independent report into the future of Potash Corp says the province should be concerned about a bid from a state-owned enterprise like Sinochem. Sinochem is more likely not to demonstrate market discipline to support the potash price. In other words, the Canadians are worried Sinochem wouldn't mind if the price of potash fell.
There's actually an oversupply, short-term, of potash, and the prices have been a bit subdued. So the worst thing from their point of view would be for someone to come in and increase supply from present levels.
Kieran Kelly believes BHP Billiton will win the battle for potash, but he feels it may have to live with Sinochem as a significant minority shareholder. With potash shares now trading around $17 above the offer price, Mr Kelly thinks the biggest issue for BHP is to remain disciplined.
They're up against a potential rival in Sinochem from China that doesn't have the same constraints about return on capital that BHP has, and I would hate to see BHP getting bluffed into paying more for this than what it's worth.
The most pressing hurdle for BHP Billiton would appear to be an investigation by Canada's equivalent of the Foreign Investment Review Board, which is due to make its views known on November the 3rd.